Welcome back to Small Caps. My name's Kerry Stevenson. Today, a recent listing, QMines, ASX code is QML. Joining me today is their chairman, Andrew Sparke. Andrew, thanks for joining us on Small Caps.
Yeah, no problem. Hi, Kerry.
Andrew, let's get straight into it. QMines recently listed on the ASX. You've got the Mt Chalmers deposit up there in Queensland. Just give our listeners a brief overview of who are QMines.
Sure thing. You can see the Mt Chalmers deposit in the background here. So this is one of our two pits at our flagship project, Mt Chalmers, which is just out of Rockhampton in Queensland. And Q for obviously QMines being Q for Queensland. We're obviously a Queensland-focused business. We've got 4 assets in Queensland, all focused on copper and gold. So we're a little unique, but I think one of the important questions here is why Queensland? And if you look at Queensland, and we've got to strip out Olympic Dam because it's obviously the biggest copper producer in Australia, so it's a bit of an outlier. But Queensland, if you strip out Olympic Dam, really is the preeminent place to find large copper and gold deposits in Australia. So 13 tier 1 deposits, lots of infrastructure. They sell more than 50% of their copper through Asia, and obviously we're very close to Asia. There's so very minerals rich, particularly in these large copper and gold deposits. So we made a very deliberate sort of, pivot out of WA Gold when we sold our gold business last year to move into Queensland. So
yeah, that was Alt Resources, which you did a big turnaround, got shareholder value. I don't want to go too much into Alt Resources unless it comes up later, but with Mt Chalmers, and that's the pit in the background, is it?
It is, yeah.
Now, Andrew, I've got to say that pit, that's been dormant for like over 25 years.
Yep.
Why did you look at this and say, you know what, there's an opportunity here? Because no one else has touched it for over 25 years.
Yeah, well, I suppose if you think about it a little differently, technology's changed a lot in 25, 30 years, hasn't it? So, so why not go and have a look at some of these old deposits? Being a former sort of fund manager, we invested a lot into resources projects in Australia, and it was always just really hard to find quality copper opportunities. And so there's this real scarcity in copper, and so when we stumbled across this particular project in the background here, Mt Chalmers, we not only saw a lot of high grade historic copper and gold production, but there was actually, once we started to digitize all the historic drilling, it just lit up. There's a lot more ore under these pits and in a number of areas around these pits, which we'll go into in a second. But so this is what we call a VMS deposit. And for those who aren't technical, VMS deposits typically occur in clusters of between 5 and 40 separate deposits. And under the pit here, you're seeing one of those deposits, but we've actually identified 3 other deposits around the pit, and we've got a number of other targets which we think have potential to be additional deposits. So in answering your question, why do we want to be here? What do we see in this asset? We saw scale potential, and I think that's what we're going to try and deliver over the next 18 to 24 months. We're going to try and find a number of these deposits and try and grow this resource for our shareholders. So
well, Andrew, for you, I don't think it's ever a case of try. I think you just get on and do it, because as I said before, you've done this before.
Yep.
And as I say to our listeners quite often, it is all about management, and it's the way we look at things. And you look at this is not just about execution. You look at this as a business, so it's risk versus reward. Let's talk a little bit about how you look at this as value additive for shareholders.
Yeah, good question. So when we purchased this asset, we actually did about a 6-month review of Mt Chalmers, and that involved firstly digitizing a lot of historic data. So to your point, we really want to make sure that we manage risk as well as deliver reward, and that's something that's probably come from my background as being a former fund manager in the resources space. We know that resources assets are what we call high risk, high reward opportunities. Yeah. And so I think one thing that a lot of people don't do in this business, a lot of management teams, is they don't think about the risk side of the business and how to manage that. And when you're seeing a historic pit in the background here, it's worked. It's it's been economic at some point in the cycle. That there's generally no metallurgical issues. There's a lot of infrastructure on site from the old the mining cycle and whatnot. So there's a lot of things that help us here at QMines to manage risk. And so part of that technical review that we did as I mentioned, about 6 months worth of work before we actually listed the business. And that really allowed us to identify a number of other deposits around this Mt Chalmers pits. And I think that's what we would like to try and, or what we're trying to show investors is that we've got a very de-risked business plan here. Even though we're an exploration business, we've got a number of deposits that have already been drilled, they've already been modelled. So it's not a question is there additional mineralisation in and around these pits or at this project? It's a question of how quickly can we convert that to resource and trying to do it cost effectively. So we've worked really hard on trying to de-risk this business. So we can not only deliver a reward, but we can do it in a risk managed way. If that makes sense. So
yeah, absolutely.
Yeah.
But what I want to talk about, you've already you've raised the funds. You came on the board at 30 cents. The share price has done reasonably well. We'll get onto that in a minute. And I want to get onto money in the bank and where that money is going to be going. And I'm assuming drilling. But you've had some high grade hits already. Your maiden drilling has already come out with some pretty high grade. Has that surprised you, or are you saying, the data showed me that was there all along? Yeah,
no, it's a good question. It actually hasn't surprised us because we've done so much work on this this project already. We've already got a really good feel for what we've got. So part of that initial program was about validating, some of the historic information, which is a really important, part of our process. Again, managing risk, and so we knew that this was a high grade historic producer. It produced at about 2% copper and about 3.6 grams gold, and that's after recovery loss. I won't go into the technical side of it, but effectively it's a high grade deposit, and we've got a lot of drilling that shows that this deposit is there's a lot more mineralisation under those existing pits, and we also believe that there's more mineralisation to the north of the pits, and there's 3 additional deposits around those pits that aren't currently in that resource. So which is what I talked about before, the de-risked upside for our investors. So.
Sorry to interrupt you, Andrew. Those 3 deposits you're talking outside this initial deposit.
Yeah.
Are you looking at them as about the same sort of size? And let's talk grades. I mean, I know it's early days, but are you looking at that same sort of size? How much data do you have in those other 3 deposits?
Yeah, so we've got probably a database now of about 55 to 60,000 meters of drilling. And a lot of that data has come out of 3 what we call exploration targets, which are defined under what's called the JORC code. And to explain that for your listeners, the JORC code is the code by which we report our resources. So it's quite a stringent code, and it sort of I suppose gives us some guidelines as to how we report the size and grade of those resources. But we've got a lot of data here. There's about under the existing pits, there's just under 400 drill holes. So we've kept that resource in what's called the inferred category, which is a lower confidence level under the JORC code. But we believe there's so much data on it that this validation drilling will actually increase that confidence level. And so to give you a sense of that, there's probably, I think it was about 82% of the historic resource was in what's called the measured and indicated category, which are the higher confidence levels. So we've got a very high quality data set here, and a high confidence in what we've got. And going back to your original question about the data on those deposits around the Mt Chalmers pit, we've got many dozens of drill holes into those already. So it's not a question of is there mineralisation, additional mineralisation. It's a question of really how much and how quickly can we convert that into resource. So we're quietly confident that there's a lot more exciting drill holes on the way. And I will say too that we've only actually drilled about 5% of our planned drilling campaign at this point. So having those fantastic high grade drill results out the other day, I know it really excited everyone, but I think that's really just the beginning here. So lots more to go.
Okay, so there's more to go. How much funds to get this drilling campaign underway? I want to talk about the drilling campaign. You've raised some money.
Yep.
How much money have you got in the bank? What are you going to be doing with that? What's the news flow looking like? And then I want to go on to the ESG component.
Yeah, sure. Okay, so we raised about officially $11.5 million. That was after quite a substantial scale back. So we actually raised a lot more, but we wanted to make sure that there was, some buying in the aftermarket. So we scaled some of those investors back. So we're very well funded for a very large drilling campaign of in excess of 30,000 meters. So that's 30 kilometers of drilling for those who don't realise. So it's a big drilling campaign. So we're fully funded for that over the next 18 to 24 months. And so that we expect will deliver a larger resource, give our shareholders lots of leverage to that exploration success. So there's a number of what I'd call brownfields exploration holes we're planning, which are lower risk, drilling, which we expect will add to the resource. But we're also going to couple that with a bit of greenfields drilling, and that's more about trying to find new discoveries. So we're going to give our shareholders a really nice blend of lots of news flow, that leverage to new discoveries, but also that leverage to the de-risked, exploration where we can just convert a lot of already known deposits into resource, which will be what I'd sort of determine as, I suppose, the free kick for new investors. So it's quite an exciting program ahead.
Yeah, you came on the boards at 30 cents, and you're up, quite substantially at the moment. I think 39 cents. What I want to find out from you, you're well funded. You're going to be doing a lot of drilling. Where do you think, I guess, the value add is for shareholders? Because you've talked about de-risking, you've talked about the greenfields as well as brownfields exploration. Do you think it's in a new discovery, or do you think it's in delivering what Mt Chalmers hasn't delivered yet? So you think that's got a lot to give? I mean, I want to know where's the uplift.
Yeah, well, I suppose just to answer the question in a slightly different way, I really believe in strategy. In building a quality resource business, we put a lot of time and thinking into how we're going to deliver that. And why not, for new shareholders, why not have multiple ways where we can deliver value? And that's the way I look at it. So we can give our shareholders a blend of some leverage to that greenfields exploration success. So we'll do part of our drilling, looking at some new deposits. We can give our shareholders some leverage to, some de-risked exploration where we know we're going to add resources over time by drilling some known deposits. And also there's a big part of our business plan. If you look in our prospectus, we've said that we are looking at other regional deposits. So the way I look at it is, if the ultimate aim here is to grow the resource to a scale and grade that's hopefully economic, then why not look at other ways? If there's other deposits in the region that are complementary to ours, and let's say we can purchase those deposits at a cheaper price than we can actually discover new deposits or add, then why not look at those too? So we've got a number of what I call, price levers here, and so I'm trying to add value in multiple ways, if that makes sense.
Yeah, you're all about the business, aren't you, Andrew? And that's kind of like, because you look at this as, this is a business. How can I give a return to shareholders? And so you're looking at multiple different ways of de-risking, but also rewarding shareholders.
Absolutely. And one thing that might seem a little, out of the box and a little different for a mining company or an exploration company is look. If you look at those pits behind the photo there behind me, you can see a very large quantity of water. Now I'll just pose a question. I won't delve in it too much, but is that water an asset or is it a liability? And this is the sort of the thinking that's going on within our business. A big part of our strategy is to not only deliver a larger resource, but do it in a sustainable way. And so we're very big on ESG is obviously a new term that a lot of new investors are starting to grapple with. But we've actually on this particular site we own some land up here as well, about 130 acres. And we've got about 48 solar panels on our site, and we've got a wind turbine, and we've got a battery backup. So we're at the moment we're sort of our site office is completely off grid and carbon neutral. So it sounds a little different, a little quirky, but we believe that there's multiple ways to add value and give back. And going back to the pit water there, we've recently worked out that there's a lot of hydrogen in that water, and we're looking at ways that we can maybe utilise that as an asset to deliver hopefully, carbon neutral fuel into these drill rigs or power into the site without. So there are some, very different sort of, I suppose, a very different thinking going on here at QMines that, and I think it is a thing that really differentiates us from a lot of our peers. Is that we're gonna, we know how to add value for people. We've demonstrated that before. We've sold some businesses and in the resources space that we've unlocked a lot of value with in a short period. And so we've got a very similar business plan here, but we're thinking differently, and that's I think a thing that makes us.
Well, you're thinking sustainably, aren't you?
Yeah,
and you're
that's
thinking
right.
about that zero carbon footprint. So for those people out there that are looking and going, mining's a dirty business, well, guess what? Andrew's turning this around, and what he's saying is we can do this in a very sustainable, zero carbon emission way, and I think that that's commendable. So well done, you. I want to find out who's behind QMines. Have you got some institutional money? Have you got some funds that are coming in and looking at what you're doing? Because it is different, and I think that focus on ESG is becoming more and more important when funds are looking to invest. And at the end of the day, and then I want to come on to copper, because that's Dr. Copper is pretty important.
Spot on. Yeah.
Let's just talk about the funds first up.
Okay, so again, just with that same line of thinking about thinking differently, we've really tried to put together, I suppose, a capital structure here that's different to the average resources company. And so I always think as a I suppose a capital markets guy with a lot of experience in setting up these sort of opportunities for new investors and things. I'm always thinking about trying to generate a tight medium-term register. And by that, I basically mean we're trying to find investors that have a longer-term view on the world. And at the end of the day, generating value is not only about delivering on site and all these, trying to add resources and whatnot. It's also about trying to create this architecture for success. And so, what we put a lot of time into is thinking about if we get some good news flow into a really tight capital structure, it'll generally outperform, share price wise. So effectively, if we've got more buying and less selling, the price goes up, doesn't it? So, and vice versa. So we put a lot of thinking into our capital structure. We've got a lot of escrowed stock here. So we've only got a very small, what we call free float in the business, where there's, I can't remember the exact numbers, but let's say it's about 40%. So at any given time, there's only about, give or take 40% of the regs can actually sell their stock. So that's been a deliberate sort of, strategy. And you saw it in action the other day where we got some great results out into the market. Our share price we listed at 30 cents, and I think we hit a high of 65 cents. And that's not only the great drilling results that came out, but it's also a factor of the fact that we've got a very tight, sticky register. And so we're well funded. We don't need to come back to the market. We've got that tight register. We've got that architecture for growth. And we're only 5% into our drilling program, our very large drilling program. So we've got lots of news flow on the way, lots of share price catalysts. We've worked really hard on de-risking the business and the growth of that resource. So it's, there's a lot of different thinking going on here that I think over time will add value for our shareholders.
We are running out of time, but it's been a really interesting conversation. I just want to find out from you, Andrew, because you come from a funds management background. You've been in this business and you understand how to create value for shareholders. Yep. What's your view on copper? I mean, it's just come over the $10,000 a ton, so the strength of it is good. Biden's putting money into the sort of green economy. There's a lot of money getting out there. Do you think copper is the commodity, the asset that is going to have extraordinary growth in the years to come?
Yeah, absolutely. It's no secret that we sold a gold business in WA last year, and we pivoted into copper. Now that was a very deliberate part of our strategy. We knew that the world is trying to look at new ways to fuel itself in a decarbon, in a zero carbon way, and we're heading down a very new path. We're also seeing, as you mentioned, major stimulus from big governments around the world, namely the main one obviously being the US and others. So copper's great because it gives you leverage to that transition, that energy transition. It also gives you leverage to advances in technology. We're all using more and more technology these days, which all requires more copper. It gives you leverage to new ways of generating energy. We now know that solar panels and wind and all these other new forms of energy require a lot more copper. So there's, it's a really nice situation where the copper market is very undersupplied with some very old mines, mostly out of North America. So Chile and Peru represent a bit over 40% of the world's copper supply. And a lot of those mines were discovered in the 60s. And so they're getting deeper and deeper and lower grade, and they're right up in the Andes. So for those of you who don't know, the Andes is, 6,000 to 8,000 feet above sea level. So they've got challenges like, how do we get water up there? How do we get power up there? How do we get our workforce up there? So it's becoming more and more expensive to deliver supply into the market. And more difficult. So I think going forward that we're going to see quite a constrained supply side, but at a time when there's really strong demand coming in, and I don't need to quote. I could quote many statistics. You can go and do your own research, but I think it's just about every analyst out there who's looking at this, the copper business really can see that there's growing demand. So and as a fund manager, I look at what does that mean for companies and how to deliver value. And we deliberately moved into copper because if you look at the ASX, there's always 200 to 300 gold stocks. So there's heaps to choose in the gold space. But there's at any given time, there's only a lot smaller number. At the start of the year, there's about 18 companies listed on the ASX with copper exposure. There's probably closer to 35 to 40 now. So there's this scarcity factor in copper, particularly quality Australian assets that you just don't see in other commodities like gold. So I think that's really going to bode well for our shareholders and value over time.
But you've also got gold in your asset as well. Yeah. I mean, you're not poo-pooing gold because I'm a gold nerd, Andrew.
Yeah, no, but I'm quite bullish on gold too. But so you're right. It's nice having that blend of I think we've got our deposits about 30% gold in resource and about a bit over 60% copper. So you are right. It's nice having that diversification because again, it manages risk. So gold obviously generally performs well when the economy's really struggling, and vice versa with copper. So we've got this nice sort of balance of risk in our business. So no, I'm a gold bull too. Don't worry. So
no, I know you're a gold bull, but your focus for QMines really is on the copper.
Correct. Absolutely.
So thing I would like to know now, because we are running out of time, Andrew, why should investors invest in QMines right now? A strong share price. Do you think it's still undervalued?
Absolutely.
Give us your summary.
Absolutely. Couple of key things we've talked about today. So we've talked about the scarcity of copper, and I think that's always going to bode well for price. I think secondly, we've got an asset here which really has development potential. So there's only in my looking around the ASX, the markets, there's only 3 to 4 quality Australian development stories out there. So it's really going to set us apart from our peers. And we'll look to deliver that over time. We're only delivered 5% of our 30,000 metres of drilling. So even though those first results were great, 13% copper, 6 grams gold, and nice silver credits, it's really only the starts. There's lots of news flow on the horizon, lots of leverage.
Give me those grades again. What was that copper?
I was just looking down, 13.4% copper.
Holy moly.
6.1 grams gold and 31 grams silver. So
nice.
This is a nice high-grade deposit. Lots of drill results on the way, but also we've worked hard on de-risking the business and de-risking that growth in resource. And I mentioned those other deposits around the Mt Chalmers pit behind me, which aren't currently in that resource. So we know the resource is going to grow. It's just a matter of going out and doing that work to do it. It'll happen over time. So lots of reasons to be shareholders in QMines.
Well, he's done it before, ladies and gentlemen. I'm sure he's doing it again. Chairman Andrew Sparke from QMines, thanks for joining us on Small Caps today. Lots of news flow to come. We look forward to talking to you in a few months.
Right. Thanks, Gary. Nice to chat.